Hey traders, Raghee here. Welcome to Charts and Coffee for Wednesday, July 7th. Great to see you all. Happy Wednesday, everybody. All right, so we have the FOMC meeting minutes coming up today at 2 p.m. It makes the morning tradable. I mean, we definitely have some interesting trading opportunities in terms of pre-minutes. But one thing we want to remember in terms of the interpretation of the minutes and the importance of their impact is this minutes release comes after that little tweak in the messaging from the FOMC in the middle of June. So there is going to be a little bit of interest in terms of, if the reflation trade is going to get some legs again, going to recover, think copper, think steel. This is the minutes that might start getting traders looking again at grains, looking again at some of these more reflationary metals. Remember that crude oil was not whack-a-mole by that June 16 to triple witching window where a lot of those reflation trades fell to pieces, broke the trends, went into some pretty wild chops. So don't wander into those too aggressively. So you might say, okay, Rog, well, where are you bullish? Well, you're looking at it. The S&P, the NASDAQ, still very bullish. These particular indices, look at the SPY, look at the SPX, QQQ, XLK, NDX, however it is you want to look at these markets, these particular groups of stocks. Notice I did not mention the Dow, nor the Russell. And if there's anything in the S&P to just be cognizant of for, being drugged down as opposed to going with the NAS strength, is keep an eye on financials. Financials they've been wobbly, right? They're taking a standing 8 count and they're still a little bit wobbly. So what that means is the likes of XLK, the likes of XLV, are going to have to do a lot more of the heavy lifting to keep the S&P moving higher. QQQ, look, if you take a look at XLK yesterday, moved on higher. Take a look at XLY yesterday, moved on higher. And then if you take a look at XLC, a little bit of a laggard, but still was able to move a little bit higher. Yes, a lot of folks were talking about Amazon. I got a lot of emails about Amazon. I mean, clearly in terms of weighting, Amazon helped for sure lift the tide as a heavily weighted stock within the NASDAQ. But remember, you have 6 names. You got Apple, you've got Microsoft, Facebook, and Google. And all of these are, of course, sort of paired up as the number 1 and 2 names in XLK, C, and Y. And then you've got Tesla, right? Other than Tesla, and Amazon's got to work overtime to kind of keep the XLY moving higher because of Tesla, being a bit of a laggard. But I really don't want to bet against tech right now. And I'm seeing overall that that's the direction the market wants to head. Far be it for me to get in its way. So with that being said, FOMC, OPEC drama continues. There are strength stories in this market. Don't step out in front of double green markets. And the two most obvious are the S&P and the NASDAQ. Remember that until we get to the financials weighting with, say, JP Morgan and Berkshire, the S&P is pretty much a NASDAQ type looking, if you want to look at it as the index, you want to look at it at the ETF level, they share a lot in common. Just remember the influence of financials and healthcare, and you're in good shape. All right, so let's see, let's kick this off with some questions here. How's that Florida weather? Here on the East Coast, definitely doing all right. On the West Coast, I think those of you just around Tampa, St. Pete, probably feeling the effects of Elsa, which I think is now a hurricane category 1. So, but doing well. Thank you for asking. All right, Alex, good morning. How does VALE look for long? Is it still an outperformer within the SLX? It was as of yesterday. Remember, SLX, that's one of those names that got hit by the reflation trade. There's 2 names, really, that I will say do merit attention to the long side as far as you mentioned, relative outperforming stocks. within the SLX. And that would be VALE and then CLF. And CLF has the added benefit, and I don't know where right now it's ranking in terms of, let's take a look here real quick. Where is it ranking on the Wall Street bets? Do we have CLF here? Gosh, that's some tiny font. QQQP. Yeah, so it's fallen off this radar. I'll tell you what, keep an eye on this ticker sentiment, because if it's able to climb back, oh, there it is. If it's able to climb back and gain some popularity on this particular scale, CLF could have a chance of just kind of doing what it did last time. That's Wall Street bets. It's not a trend, and I think we spent an inordinate amount of time in this room saying, look, please don't chase this higher, because this is where, once the Wall Street bets interest wanes, and if there's not another wave of participation, whoop, and that's exactly what we've seen. Although, if we can kind of gather some steam around some volume ledges, kind of around $20, the decade level, major psychological level, it's valid in terms of the quality of its trend, and B, it would definitely be buyable, although not as good as VLE. So thanks for the question. Good morning, everybody. All right, so I'm currently learning about gaps up and gaps down. Hopefully someone suggests, as far as gap up and gap down, Pepe, it depends on whether you're looking at it from a day trading perspective and whether or not the first 3 to 5 minutes are indicating some sort of fade. It also depends on how you're defining a gap. So let me give you my definition of what I believe is a gap. I think it's also referred to oftentimes as a true gap. Okay. And I think that's more volume profile, market profile verbiage. So the way that I look at a gap is it opening above both the previous session's close? That's your generic gap definition. But then I add on one more criteria. So there's 2 criteria. Is it opening above, and this would apply to below too, but is it opening above the previous session's close and the previous session's high? If it's a gap down, is it opening below the previous session's close and opening below the previous session's low? And then, the implications, depending upon the time frame you're looking at, can be obviously, applied to your interval. But for example, we're going to be doing the live trading for the playbook. So for those of you that are joining me for the new Day Traders Playbook live trading, which starts in 11 minutes, we're going to be taking a look at the gap implications on the indices, on the sectors, on the stocks. That's one of a number of things that we look at on the daily before we transition over to the intraday. And we've had a lot of questions about, Raghee, I didn't know that the daily had that much impact on the way that you day trade. And so actually, luckily, for those of you that are kind of curious about this but may not be in the class, you can still join us. But if you're kind of curious about those implications, in I believe this week's Countdown Trader update, Trish is working on exactly that topic. So make sure you check out countdowntrader.com, my free blog. And I believe the next update is going to be the implications of the daily on the intraday. Check it out when it's posted. All right, next up is, what is my take on, oh, sorry, Jess. I'll be right back to your question, Alex. Jess has a question about XHB. XHB, I love that you're thinking about the individual stocks. XHB is a little bit of a mess, right? Your point, though, AR, nice trend. SWN, pretty good trend, a little bit more volatile and a little bit more, I would say be a little bit more conservative on the pullback, maybe factor in the 55 exponential via the simpler propulsion, which, by the way, you'll notice, take a look here. Let me show y'all real quick the value of the propulsion. Moving averages really should be considered within the context only of a trend. The only exception to that is the 200 simple or 200 exponential. So these, if you kind of dot to dot them, that's the 55 EMA. But the cool thing about using the simpler propulsion dots is that when the criteria is not as valid because the market's getting a little bit more choppy, these will, for a period of time, you'll notice they'll shut off. So you know it was there. You know the market's getting a little choppy. Simpler propulsion shuts off, and then it turns back on when the market begins a little bit more of a trending type action, which is more valid for those exponential moving averages, and simple for that matter. So notice how the 55 was in play, and I would extend the validity in Southwestern a little bit lower. I don't really like XHB. Not super, fan. So now we're wandering into some energies, and so no, XHB no, AR yes, SWN be more conservative, and EOG I would also say be a little bit more conservative. And then additionally, all right, so you've got your 55 here, right? And then additionally, I would say let's factor in the volume ledges. I mean, look at this. That's beautiful. Factor in those volume ledges. And at that point, you've got the culmination of a price-based indicator, which is what moving averages are. And then you couple that with a volume assessment of whether or not there's support or resistance at certain levels. And you've really got something pretty special with that volume ledge. So I really like that on EOG. Now, what I'm not doing, of course, is are these the best looking trends within the overall sector that they're in? But as far as those three go, that's the way I would approach those four symbols. Definitely no to XHB though. XLRE, that's a whole other conversation. Definitely that. All right, so Alex, what is my take on transports as a leading indicator? Look, Charles Dow's been talking about that for 140 years, so give credit where credit's due, right? And think about the weighting, however, right? Why do I bring up Charles Dow? One, probably a whole lot more than everyone here recognizes the things that they do in the market. That was Charles Dow in the late 1800s. How incredible is that? That a guy that was talking about the markets in behavior that's completely different from what we deal with now can still have so much relevance to market behavior today. So think about the weighting of the Dow Industrial Average, Charles Dow Industrial Average, and then think about how transports would have then reflected on the composition, the stock composition of the Dow. Is it as applicable today? Are transports really that, connected to the heavily weighted stocks within the Dow today? Not as much. They really aren't. So some of the relevance of transports to Dow Industrial Average, because remember, the composition of these indices are always ever changing. They're evolving. So with that in mind, I think, yes, some of the remnants of what was so valid a century ago and even more recently, but some of the remnants of that is still there. But remember that when you take a look at the transports and then the connection to the industrials, whether you're looking at XLI or DIA, think about the fact that XLI or the industrials are not even the number one weighted sector within the Dow. You're really usually duking it out between tech and financials. So yes, I do believe there's some implication, but it's not necessarily in the way that it might have been, even a handful of decades ago. I hope that makes sense. So I still keep an eye on that. Why? Because I'm a student, and most of my tools, my adherence to trends, the grab candles, the wave, the volume ledges, the structure of the market, that is all credit to my great fortune of being influenced very early on in my career. The early years of my trading were very influenced by Dow principles, which posthumously became known as Dow theory. So yes, but not in the way that it probably once was. And I hope that makes sense. Okay. All right. So next up is doing okay in St. Pete, Pat. Good to hear it. Good to hear it. All right. So last week I went over EWZ, right? Brazil. Is it still on my watch list? If so, what would trigger an entry? So Brazil, Canada, Australia, I was watching for Brazil, but why my hesitation? So those of you in Sector Secrets know we've been focused on healthcare. We got in and then scaled out, moved to a break-even stop on the energy pocket of stocks that we had, or ETFs that we played. We were long bonds, but why am I not focusing on some of these countries? Because when you look at EWZ and EWC, Brazil and Canada, you're talking about two countries that are very related to the reflation narrative. They're very attached to the commodities, right? Commodities, that's that reflation narrative. So my hesitation was, well, if we're seeing an unwind in grains, if we're seeing an unwind in meats, if we're seeing just a general outline in the grocery store commodities that I talked about, quite frankly, throughout this year, until the Federal Reserve really just, by that switch in narrative, just pull the rug out from underneath them. I kind of call this the Charlie Brown and Lucy phenomenon. That is what the Federal Reserve did to the the reflation trade, or at least grains and meats, and those more reflation sensitive metals. And so when that happens, I've got to think twice about Brazil, Canada, things like that. So is it still on my watch list? Probably as an oversold buy. I still want to be, generally speaking, long. I want to show you guys something though. Look at this vacuum, if you will. So I've talked in the past about volume ledges sort of acting like Alex Henold scaling El Capitan. You guys see Free Solo? That probably will tell you a lot about trading in some ways. This is Alex climbing. And what is Alex looking for? If you remember, or any climber, they're looking for somewhere to, hook their hand, hook their feet, and scale the wall. Well, price in its relation to volume is very similar. That's why I like the horizontal price-based volume represented on my chart. Time-based, not so much, right? But price-based, absolutely. So if you lose your grip here and you're Alex, what's your first shot to maybe catch yourself? Here? If you fall there, what's the next one? Here? If you want to climb, you've got to scale this, and then you're going to grab onto this and maybe grab onto that. That's sort of how price responds to volume. So notice the free fall through here. So as far as I'm thinking, maybe this Darvis kicks in, maybe this volume ledge kicks in, but that's the zone in here that if we're going to see price action caught by something, caught by price, caught by volume, that's really what we're talking about. 38 to about 37.70, a 30-cent range. And so at that point, yeah, maybe we can start thinking about an oversold buy level to take advantage of EWZ. So thanks for that's the is it a swing trade any longer? No, because it's not a trend any longer. So I would not call that a swing. That would be more along the lines of, put a slow stochastic on your chart. Put the V-score, as you can see, where are we in relation to the range of the standard deviation of VWAP? So I'll take a look at that. Are we at the mean? Are we going to be supported by the mean? We have been before. We're very close again. So I'll put the V-score on there. Put the ready, aim, fire. So slow stochastic, V-score, ready, aim, fire. If you're using a slow stochastic V-score, now you've got price and volume. If you're using the V-score and the ready, aim, fire, now you've got volume and price. So always think about that confirmation of volume and price, and you'll notice how well that works here on EWZ. All right. So that is Charts and Coffee for today. I'm going to head on over to the Playbook classroom for our second day of live trading. I will see you all that took the class there. And everyone else, thank you as always for being part of the Charts and Coffee crew. And again, I really appreciate the time in the morning. Head on over to your respective rooms. It's almost time to get to work. And I'll see you tomorrow, same time, same station. Be good to each other.